this S&P market wants to go up. However, until next Monday or Tuesday, there are still several potential bumps in the road that could try to grab you. Today is September 16th, and the market has been going up and up and up and continues to have negligible, if any, pullbacks. Even intraday it has small pullbacks. It's maintaining the uptrend line underneath it, as you can see in this chart. And we still have one more date, which was the 21st of September, is a solar eclipse, which was the last of our potential low points that we had initially stated. The first was, of course, September 3rd. And on September 2nd, that one came in, and it's gone up ever since. And what we're expecting now is there's still a reasonable chance that between now and Monday or Tuesday, there could be one dip that you can buy. In other words, where it doesn't keep going straight up. However, of course, given the Fed decision is coming tomorrow, and given there's a quadruple witching on Friday, and given that there's an eclipse on Sunday, there's still quite a few little things that could interfere with this bullishness. However, we are bullish. We are expecting the market to go much higher, and we're expecting the dips to be minor. Even if it does come in, it's not likely to be more than like 100, 120 S&P points on a pullback. And so you need to decide for yourself how much risk you're willing to take. You can wait until next week to do nothing. Or some of you have already gotten in. You could wait until next week to add on. Or you could simply buy and just say, I don't care, and we're just going to see if the thing pulls back. Fine, I'll buy even more. In any event, between now and the late part of October, we're looking at the 29th through the 3rd of November as the next intermediate term high point. And the cycles that we've been looking at, of course, is this 5-month, 8-month, 13-month, and there's also a 17-month cycle. Oh, by the way, we had mentioned I'll be doing a live webinar on the Treasury bond market, and it'll be on the 22nd at 3:20 Central Time, right after the market closes. And the link for it will be in the description in this video. Okay, so meanwhile, the story is the same. We've been bullish. We're still bullish. We expected pullbacks. We got one of them, but the middle one on the 10th was minor. And the one that coming in on the 21st may not be very big. So we may or may not get much of a thing. In terms of what happens after that, we're looking at a high point around the 25th or 26th of September, a low around the 6th of October, and then another and final high of this immediate swing at the end of October, early November. However, that still may not be the end of the game. We've recently discovered that, for example, astrologically, there are several bullish aspects that have happened or will be happening that could carry the market further in time into the future, into next year. And for those who are interested, one of them is Mars just went into Libra a few days ago, this last few days ago. And that has, historically, I look back over 90 years on the Dow, it's about 80% of the time bullish. And the duration of those trades tends to be somewhere between 6 and 9 months. In other words, 6 and 9 months from now, the market will be higher than it is now. Okay. And the other one is that the Jupiter trine aspect on Mars is also very bullish. We checked back on that one. That came into play a number of months ago. And it generally goes up at least until the late part of October, but then there's another high when the event takes place a second time in March of 2026. Now, given we're looking for 7,600 as a target, and the market's right now at 66 and change, it's a long way to go in a month, but it could still do so in a month. However, it is possible to go even higher than 7,600. And what you need to do is see where it's at as it develops and see if it's reaching the targets on the time point that we expect. And if it isn't, it could take longer and it could go higher if it continues on into next year. So, but the bottom line is you're looking to buy this thing. There's still a chance to do it between now and the 22nd of September. And then after that, it's likely to be very explosive. We've pointed out the 60-year cycle indicates that. It's been repeating. It's still repeating. We want, until it stops repeating, and it has been very, very highly correlated for years now, we're not going to ignore it. And basically goes up into the early part of November. and then the bear market starts. So once this thing finally ends, whether it be in November of this year or March of next year, the reality is we have a bear market coming, a big one. It's probably going to start in 2026 to get really heated and continue potentially into at least the early part of 2027. Okay, we've seen the 60-year cycle and double that, 119 years. They both agree on the next years, literally. They both are very highly correlated with the last 3 or 4 years. They both agree with each other going forward, except the 60-year pattern is more bullish in the short term. But next year, they're both very bearish, and they agree on how long, implying a very large decline, and then a rally after that again. So the game is never finished and goes up again into the 2028, 2029 area.